Well, hey everyone, it's been a few weeks since I've made a client update video, and that's because the market volatility has moderated, and for now, it seems to be in a little bit of a holding pattern. But I thought it'd be a good idea, now that we have some water under the bridge, for us to do a recap and talk about where we may go from here. So year to date, the Dow Jones Index is down 18.7%. Now that's as of April 22nd closing prices. But if we break that down into how this return has actually happened, things get pretty interesting. We went from the first of the year to February 12th with a positive return of 2.3%. Now at that point, it looked like we were getting teed up for another positive year, but then we had a stretch of 27 trading days where the Dow declined 37%. Now I know this wasn't an easy time for you, and as you watch the market and your corresponding investment value slip away faster than anyone thought was possible, I know it probably felt a lot for you like it felt for me, like we were getting punched in the gut every day. But then, just like always happens, the market turned, and from March 23rd to the close yesterday, April 22nd, the market has rebounded 26.3%. Now, before I go on and talk about what's next, I want to talk about that percentage change for just a moment. With just a quick glance, it seems that if we went down 37%, and now back up 26%, we're only 11% away from the high. But that's not the way a percentage change works. To make back the loss from the 37% decline, the market is going to need to increase by nearly 59%. This is because a percentage change is measured from a base value, and the base value changes before and after the loss. Now, the base value we're calculating from was the market high when calculating the loss, but the gain is calculated from the low. So for example, if I have $1,000 and I lose 50%, I now have $500. To get back to that $1,000, I need a return of 100%. So this means that with a 26% increase from the low, we're getting close to hitting the halfway mark on making up these losses. So what's next? Well, I really don't know. I do think it's remarkable that the market has recovered this quickly despite the fact that there is still so much that's not known about the economic damage. So if the reopening of the economy hits any snags, or the virus has an uptick in infection rates or hospitalizations, I'd look for another sell-off to happen. But when that happens, it's not going to change my opinion about the next steps for your portfolio. We invest on principles, not predictions. Those principles are to buy high-quality investments, rebalance when necessary, and never, ever, ever try to outguess the market. I know these are anxious times, and I know the doom and gloom in the news headlines doesn't help anything. I was talking to a client yesterday, and we were talking about how quickly the market can change directions and why that makes it a fool's game to attempt timing the market. And it reminded me of this reprint I ordered years ago, and I used to keep it in my office. And while we were talking, I started rummaging around, and I found it in one of my filing cabinet drawers. And those of you who have been with me for a while, you probably recognize this because I used to have this hanging on the walls of my various offices. It's the USA Today Money section, and the headline reads, "Where's the bottom? No end in sight as day by day the Dow sinks away." And the opening sentence in the article says, "The worst bear market since the Great Depression just keeps getting worse." So why in the world did I order a reprint of such a negative headline and then hang it in my office? Well, it's just a reminder to tune out the noise when the markets get rough. This article was printed on October 10th, 2002. Looking back, now we know that was the very day the market turned and began a bull run that nearly doubled the market with a 94% return through October of 2007. So I'll continue to remind you, there's just no way to predict these things, and in the absence of predictions, we'll stick with the principles of broad investing in high quality, low fee investments, rebalancing occasionally, and sticking to the plan we set up when you first became a client. Listen, as we navigate the potentially rough waters ahead, don't hesitate to call or send me an email. We're still in the office every day, and it's markets like these when I expect my clients to increase their communications with me. So please don't ever think you're being a bother to me or any of the staff here. You are why we are here, and hopefully soon everything will return to normal and we'll see each other out and about again. But until then, I hope you and your family all stay safe, healthy, and blessed. And one last thing, if you know of anyone who you think could benefit from what I've talked about today, don't hesitate to share this video. Right down below, there's a share button where it makes it easy to send to others. Thanks for watching.